Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, March 24th, 2008. Well, the market's rallied again, guys, and this is what we foresaw in the charts. You can go back in the videos and check it out. This is what we called for. This is what's happening, and the charts told us. I mean, we're not doing, rocket science. Yes, we have some proprietary stuff that we've developed over the past, year or so since working with this stuff, and it sure as hell helps. But ultimately, the charts were what was telling us the pattern, price, time, and volume indicators were telling us we were going to rally today, and what a rally it was. You had the Nasdaq trading up 3% or 68.5 points, the Dow up 187 points or 1.5%, and the S&P was up 20 points or 1.5%. And you got to be happy. This is what we've been talking about, expecting. We're getting it now. We're taking advantage of this on the long side. The small cap, mid cap day trading market's beginning to really pick up here. We're seeing the start of what we saw back last September and August, where we really had a beautiful day trading small cap, mid cap market where these things would just take off, for 10-20% intraday. We had a lot of plays up today. There were a lot of plays we were looking at today jumping 20%. Very, very common. You can also look at the SPY and the E-Minis as having some nice moves today. Although, believe it or not, there was not a lot of pullbacks in the SPY and the E-Minis until late in the day. So it kind of gives you a perspective. And we're going to look at the charts here and really get us an idea of the intraday moves. So this is what I'm talking about here, and let me get out my trend tools so we can go into this market. But ultimately, guys, this is what we've been talking about, the rally. You guys that have been watching the videos know this is exactly what we called for. I hope some of you out there, even from the free videos here, took advantage of this and went QLD long. Let's just check out the QLD before we get into this here. But look at the move here. Basically, we're calling the long down here, even when everyone else was wanting to stone us. We were saying, guys, this doesn't look like it's going to break down. The pattern, the price, the time is not looking. And here you have the QLD, which is 2 times long, the Nasdaq trading around $62, 73 closed today. And ultimately, you got to look for a pullback or a consolidation now as we move into the 50 moving average on all charts. And you can see the 50 moving average right here. We did pierce it, but ultimately you have to expect consolidation. So there's an $11 move available right there on the QLD off the call on the free videos, let alone coming into the intraday stock chat and getting the calls there on the little stocks, the mid stocks, the large cap stocks, the swing trade alerts as well. So I do encourage everyone that trades the E-Minis or the small, mid cap, large cap market out there, come join this chat room. We've continued to gain people, and it's just continuing to be a great experience for us within InTheMoneyStocks.com and from what we hear and the feedback we're getting from everyone in the chat room. All right, guys, so let's take a look at the E-Minis here. And you guys will see what I mean, how it was an interesting day on the E-Minis because there really was no significant pullback until late in the day when profit-taking took form. And you could see this. We hugged the 20 moving average all the way here. You had little pullbacks, but nothing really buyable. Then a blast off here right at the open. All right, you really got a blast off, which we kind of coincided with a little bit of a continued short squeeze after the rally. And then ultimately you continued just to trade up to sideways until we topped out here. And then towards the afternoon, you got a little bit of a pullback. But what you really want to see is like, let's say this move up here, you want to see a pullback to the 20 for a buying opportunity and a spike up. So while the stocks were hot today, the E-Minis often were a little tough to play, and the SPY, the spiders, and the other, the other indicator, the other indexes were very tough to play because there was no necessarily, you need that pullback to a moving average to go long. You just can't buy recklessly up here because ultimately you buy up in this area. By the end of the day, maybe you get a little pop here and you're smart enough to sell into that, but ultimately by the end of the day, it's come down as it was just too overbought. And that's the advice we had given in the chat room today. Once we were up to this heights, you just can't go long there. And at the same time, light volume, very, very light volume today. We always talk about the hangover from a holiday weekend. Those of you guys that trade alongside us and watch these videos, usually the day before a holiday gets light in the afternoon, and then the day after a holiday, you have what's called a hangover effect, where you have continued light volume as people are kind of just getting back into the swing of things. A lot of people are still on break with the kids, and you don't have the same amount of volume. So the volume today was 1.4 million contracts on the ES. Last week, we were doing 2 times that, but in the middle of the week, if not more. We were doing 3 million plus contracts last Wednesday, Thursday, and so forth. So to give you an idea of how light the volume was today, just unbelievably light. And that's why we advised in the chat room, you just can't go short here either. It's a very tough market in this situation when you're playing indexes. Now, stocks are different. You can play the moves in stocks, and there were some nice moves we can go over, but ultimately we're talking indexes here like the E-Minis or the SPY, and I'll show you the chart on the SPY. All right, and again, you can see it just kind of drifted up early and then kind of got in this channel where here I can draw even lines here. You ultimately were in this channel, and yes, it kind of went up, it went down a little bit, but nothing too crazy. You traded up a little on the top, then came back by the close, and you got a little bounce right here at the close off the 50 moving average. But again, nothing crazy. You want the volatility intraday to be able to play these spikes, and you just didn't have that today as the market floated up on light volume. So now let's take a look at the daily, because this is where we get some interesting stuff. Now, you guys know we've called for the rally here, and from the lows here, this is a tremendous rally. Look at the SPY from down here. So you're talking about the low here on the SPY being 126 back to 134, almost 135 up here. And we actually hit 135.85 at the high right here. And that's a tremendous move on an index, a spider here. And the Nasdaq is basically up 200 points or so from the lows, essentially. Maybe not quite 200, but 150 or so. Just a tremendous move, and you guys know how we feel about the moves. We love to see rallies. We call this rally, but you have to expect now consolidation. You guys know how we feel. First hit of the 50 moving average, even the second hit of the 50 moving average can be looked at as a pullback area or consolidation. You don't always expect it to break out on the first or the second try, just like hitting into a door. You run into a door, you might weaken it a little bit the first couple times, but ultimately it's going to take 3 or 4 hard hits before you bust through that door. Same thing applies for moving averages, and you can see here on the SPY, we did hit it one other time, but this is the second time. So now the question will be is, where do we pull back and consolidate, which is the healthy thing to do. You got to think of a market as being like a person. You want it to be healthy. Yes, it's great if we have another rally tomorrow where we're up 100 points, but ultimately that's not a healthy thing. You want us to build a base here for a day and pause and before the next blast off, and then it has so much more power behind it, you expect more out of it. If we were to rally big, I would almost look at it as a shorting opportunity tomorrow. You'd almost want to look at it like that, even though you got to be very careful in this market, especially when the government and the Fed always seems to have a hand in something. And by the way, today, guys, the news out that started, or what they're attributing, even though we knew it was going to rally beforehand, and again, we know because we read the charts and the proprietary analysis that we can teach to institutions and individuals, and we're more than happy to share it. We do our best to kind of give everything out to everyone that at least compensates us properly for it. But what you have to understand here is that the charts were telling us this. It's just the news that happens to coincide. So you can almost tell when good news is going to come out by chart setup. You set up perfectly, and you say to yourself, okay, well, something will cause it, and the media will hype on that as the reason, but ultimately the charts were telling us we were going up. So in any case, let's watch for consolidation here. Maybe we go a little higher tomorrow, but ultimately I think you're going to look for sideways trading action overall, maybe a pause day tomorrow where the Nasdaq is up or down 10 points, 20 points, somewhere in that range of a nice, healthy consolidation. Although, in all fairness, the last time we had that mega rally, and I'll show you guys that right here, this mega rally had a reversal the next day. So it was interesting, even though we still didn't give up, and we were kind of questioning ourselves right here, because you had that mega push for 2 days into the 20, and then the next day you had a mega reversal. And a lot of people said, well, it looks like we're just going to head back down. We can't hold any rally. And we held to our guns. We said, listen, guys, this is going to go. This has to go. The charts are telling us it's going to go. You even had a little bit of a W pattern we pointed out to our subscribers here. You had a little A pattern, which was a perfect 0.618 retracement. Those of you that are Fibonacci fans, Fibonacci retracement, one of the areas is 0.618. You had that perfect retracement, and then the blast off here for the WV pattern. So now, again, the question is, we've had a WV pattern, do we consolidate? So let's take a look at the Nasdaq. The Nasdaq's going to show you generally the same thing. The only difference with the Nasdaq, this is the first hit of the 50 moving average. So it's my belief and our belief at InTheMoneyStocks.com is that you really need to see a pause here for the healthy market. If we were to push up more tomorrow, then I would start to look for a pullback, probably to the 20 moving average. If we consolidate here and trade sideways to slightly lower, then at that point I'd look for another powerful move up. But essentially, we have had the rally that we've been expecting. Although I do think, and we do think at InTheMoneyStocks.com from our analysis, that as long as we do it healthy here, and that's the key, as long as we put in the right formation, we do expect another push higher as people kind of think that this junk is behind us. Now, it's not totally behind us, so I think it's important to realize is that ultimately we're still analyzing the charts, and we're looking at the Elliot Wave patterns as well, those that are Elliot Wave fans, and this is very tough to analyze, but the daily Elliot Wave pattern shows us a possible bottom, but the weekly does not confirm it. And we always defer to the higher time frame. All right, you always want to go for the higher time frame, and I'm not going to get into showing you guys exactly the Elliot Wave stuff, the 5-wave down pattern and so forth. Those of you that know a little bit about it can always come and join the webinar that we're giving on April 5th if you want to go over that, or actually do private consulting. It's much more accurate. You'll get much more out of it one-on-one. And it's virtually, you'll get definitely more out of it, I think. But the webinar is great for an overview to get you guys into all the technicals. But in any case, what I just mentioned about the Elliott Wave pattern is that the daily is showing that we've had two 5-wave down patterns, ultimately, which signals what you can look at as a possible bottom in the market. But the weekly is not showing that. So now the question is, which one's right? Ultimately, I don't think the market's out of it. Everyone just got so bullish already, believe it or not. And granted, it's a great rally, and we called it, yeah. But you have to be able to determine where the market is. So we'll continue to read these charts. We'll continue to bring as much stuff to you guys as possible to give you guys insight in where this market's going. But that's all I'm going to do today for today, guys. Come back tomorrow. We'll do some more analysis on this market. We'll see where it hangs out. Going to be fun, guys. Hang along for the ride. Come join us at inthemoneystocks.com. Have a wonderful day. Remember, the charts tell the truth. Take care.